Oh, this I want to hear. Palumbo Wealth Management founder and CEO Philip Palumbo is here. Well, how do you do that? Foolproof your portfolio.
Well, in terms of overall portfolio management, we're big believers in balancing a portfolio properly with the use of long-term treasuries, intermediate-term treasuries, gold, and commodities mixed with equities as a hedge. And when with a portfolio like that, no matter what type of economic environment you're exposed to, all of our research has pointed to it does help protect capital on the downside, which is really important with the type of clients that we serve.
Okay, helping to protect against the downside. You're now speaking my language, but we also want growth at the same time. How do you do that? Is it by picking dividend-paying stocks?
Well, the core portfolio that we manage, there are three key criteria that we look for. Number one is stable earnings. If you have stable earnings, then you're generating lots of free cash flow. And if management is very good at what they do and they deploy that capital and earn investment capital returns of 10% or greater, those three critical criteria with businesses will make for a great sound portfolio that can help minimize some risk on the downside, but also get you a decent return on the upside. Okay.
You like Entergy? That is a name that does have a good yield, though. I mean, I just tossed you a blooper softball. And look, when you look at the yield, 4.5%, that's certainly attractive.
And not only is the dividend of 4.5% attractive, it also, they've increased their dividend over the past 3 years by 6% per year. So the dividend's attractive. They're trading as a whole relative to their group about a 15% discount to fair market value. The PE is 14. The average PE for the utility sector is 15.5. And Entergy is a phenomenal business. They made a lot of investments in renewable energy. And with that, renewable energy will increase margins in a lot of these businesses. And if you think about the demand for electricity that's going to happen over the next 2 or 3 years due to AI, not only is there growth potential, like you mentioned before, but you also have margins that can widen. And they're trading at fair market value, like I said before, that's about 15% below that. So when you think about the next 2 to 3 years, you mentioned Buffett's name before, this is a great quality business that if you're a long-term investor, you can perform very well.
Yeah, about a 22 billion market cap. Anything worry you right now about the overall market and equity investing?
Of course. I think the biggest thing is interest rates and where we're going with interest rates. I think the Fed keeps telling us that he believes that inflation, he wants inflation at 2%, and he continues to say that we're not there. So if we're not there, what does that really mean for the Fed? And what is the Fed really going to do? So there is a chance that the Fed may not do what the market wants the Fed to do, and that's going to create volatility. That can move rates higher, and that's a concern overall for the market. And that's some of the volatility we're seeing here today.
Okay. Well, Philip, volatility, yeah, it is up. We've got the VIX up a couple of percentage points here. We don't often see that. Good to see you. Thank you so much. We appreciate it.